Hi trader, welcome to the weekly Forex overview brought to you by Admiral Markets. My name is Chris and I want to take a look at the euro dollar, pound dollar making ABC corrections. Is it a reversal or just a retracement within the uptrends? Now first of all, be aware that this video is shown to a global audience but may not be suitable for everyone. Please visit admiralmarketsglobal.com, select your country of residence and contact the appropriate entity to find out if it is suitable for you. Also, please note that trading for exchange and global financial markets is considered high risk. Please seek the advice of an independent financial advisor for more information on that. This webinar is for informational and educational purposes only. By continuing watching this webinar or video, you agree with this disclaimer and you are aware of the risk involved when trading. This is the pound dollar 4-hour chart, and we had, of course, a very strong momentum for a very long time. Price really very bullish here, making some minor corrections, but ultimately continuing much higher for about 1,000 pip rally. All the way here it was 134, all the way up here it's almost 144 indeed. So quite a substantial push up. And then on the daily chart you can see how these daily candles really accelerated after we already had a couple of higher highs and higher lows at that point. So this uptrend very strong, and I think that therefore, this is probably a wave 3. Now, there's no guarantee for that, but it seems likely to me. So if I put a fib on that wave 3, or wave 3, potential wave 3 that is, then this could be a wave 4. And this could be a retracement, a consolidation for one more push higher. For instance, to test these R2 and R3s and the minus 272 target and 145. Now, so far, price is basically acting like a wave 4 because price is on the 4-hour chart making kind of a correction, then making another correction, and here could be another correction. So this could be an A, B, C for that bigger wave 4 like this, and up it goes for wave 5. So ultimately, I think that this bearishness is a potential correction. Now I would consider that not to be true. I would say that there is a bigger chance of a downtrend only if price manages to break below the 50 fib and the long-term moving average and the support zone right here. In that case, tables are turning, and indeed, this might not be a retracement. This could be it of the upside, and it's down, potential downtrend from there. So that is something that could happen. For the moment, I think that this could be testing this bottom. There are a couple of things that could happen. One is price makes an ABC at double bottom, it's at 38. Another scenario is that price makes a bounce at the 50 fib. Another scenario is that price bounces here or a bit lower, makes a new lower high, a new higher low, and we get a triangle. A, B, C, D, E. Once price finishes the E part of that triangle, that's always where it's most interesting to find a potential trade set up to the upside, because in that case the triangle should not break this bottom anymore and price should break the triangle to the upside and therefore continue most likely to 145, but at least break this top, all right, or challenge the top at the very minimum. So those are the scenarios I'm keeping in mind. Is triangle, 38, 50 bounce, all bullish environment from my point of view, unless it breaks the 50 fib. That's basically my key kind of analysis and confirmation level. Now, obviously, if it breaks through this resistance trend line, that would also increase the chance of a breakout to the upside as expected. We're going to take a look at the euro dollar and dollar yen in just a second. Just wanted to share with you the webinars that we have this week. Every week, of course, Monday, Tuesday, Wednesday, Thursday. Nana takes a look at live trading on Monday and Wednesday. Tuesday and Wednesday, taking a look specifically at price action this time. And Thursday, we take a look at fractals. And of course, don't forget, each trading day, there are real-time trading ideas in the morning, 10 a.m. GMT time. Now, the euro dollar is basically doing the same. It is challenging the support trend line. Strong uptrend here too. Basically on the euro dollar, maybe not as strong as the pound, but ultimately, well, pretty close. Basically made a 600 pip rally from that same spot. Ultimately also in a clear uptrend, higher highs, higher lows on the daily and the 4-hour chart. Now, on the 4-hour chart, we are seeing a little bit of a pause right here, and there was divergence between these tops, so that is not too strange. And I think that we could be seeing the same kind of A, B, C pattern as the pound dollar. So I don't want to repeat all of that. I think that basically price could be in the same kind of vibe, that price might retest this fib. There we go. And basically price could bounce at the 38 fib, 50 fib, at the previous bottom. All of those could be support levels and indicate continuation to the upside. Minus 272 target is around 127. And a break below the 50 fib and the support zone on the left, that and the long-term moving average and the weekly S2 indicator, which is, by the way, part of the Supreme Edition plugin, specially developed by Admiral Markets, and you can download that for free on the Admiral Markets website. So a break below that would indicate, I think, a potential downtrend. Otherwise, this is still looking bullish, despite the choppy correction, the bearish kind of view maybe that some might have on this pair, because it is a potential double top, and price is obviously not moving up anymore. It is quite lacking any bullish candles, so some might be looking for reversals. I think it's too soon for that from my point of view. It looks more like an ABC correction, and a break of this top basically would also indicate a potential breakout. So that's the same thing as the pound. Dollar yen, a little bit different. I think that we are seeing a potential wave 1, 2, 3, 4, 5. Now for that to be true, sorry, this is 1, 2, 3, 4, 5. Now for that to be true, I'm putting a fib from the potential wave 2 bottom to the wave 3 top. And if this is a wave 4, either this wave 4, or if we use a smaller swing, this wave 4, then we would not expect price to break below 109.50, which is the weekly pivot point, the 50 fib, and I guess also these broken tops. So from this point of view, price could go to 109.50 and still bounce to the upside and make a trend continuation up to 111, 111.60, 112. But a break below 109.50 would definitely change the perspective. It would break below the support trend line, and in that case, I think that we have to reanalyze probably the higher time frames and take a look, and you can see that for the moment, price is at a pretty strong bouncing spot. It could be a inverted head and shoulders. So from this point of view, I think upside is more likely to at least retest levels, maybe up in here, the R1, the R2, the R3. But you never know, a break below the weekly pivot point and price could retest the S1, break below the S1, and who knows, there could be one more push down to S2 to retest the very, very bottom at 107.50. More info on admiralmarkets.com, education, analytics, the Supreme Edition plugin with 60 extra features, and of course more info about how to start trading and what instruments can be traded. Also check out YouTube channel of Admiral Markets, Facebook, Admiral Markets, and feel free to reach out through the telephone and email address. And above all, wish you good trading. Cheers.